Your money safe. How can you know? Get in touch with us. 22422 is our SMS line at Citizen TV Kenya or at Citizen TV News. If you're online, please use the hashtag Opinion Court, whichever platform you're using, Facebook or Twitter. It allows us to track your conversation. I'll introduce my expert panel to you this evening. To my right, Gabriel Negatu is Regional Director with the African Development Bank. To my immediate left is Shiv Arora, Associate Partner, Saiton Investment. And next to him, Ishmael Nyaribo, City Advocate. Gentlemen, you're welcome to the program. Shiv, I believe I'll start with you. You know, 3 banks closing in 9 months points to some serious loopholes in the banking industry. What are the loopholes?
I don't really think it's loopholes in the banking industry as such. If you look at it, there's still 42 commercial banks operating in this banking environment. Take a step back, look at the Kenyan economy. It's stable. We've seen a stable shilling, stable inflation rate. There's no reason as to why that poses a risk to the Kenyan economy. What we've actually seen is 3 really isolated cases which can be linked to corporate governance and ethics at the end of the day. And yet the sentiment that there is that regulatory controls prior the new governor may not have been as tight as they should have been. Is that your own assessment? I think the view is that we're now transitioning in the Kenyan economy to a more regulated environment, especially one where a lot of focus is placed on corporate governance, and that's what's led to the closure of the last 3 banks, especially Dubai, Imperial, and now Chase. Gabriel, how, in very lay terms, how can one tell if their money is safe at their bank of choice?
Good, thank you. Well, in very lay terms, I don't know how late it is, but there are certain core principles here you need to look at. Issues like how is liquidity managed? How is risk? How does the bank manage its risk? What kind of corporate governance does it have in place? What kind of management structure does it have in place? What kind of information disclosure policies does it have in place? So if someone, before investing or putting your money in a specific bank, took time to go through these, and there are disclosure requirements which all banks comply with, they will have a reasonable assurance as to where that bank stands. Look at the previous year's annual report. Maybe a bit technical, but at least you can gather enough information to decide whether or not that's where you want to be. And so one should be able to walk into a bank and ask them for these specific documents. Absolutely. And if they don't provide them, you should have a bit of a question. Yeah, you don't need them. You don't need that bank. If they cannot provide you, that means they're not complying with the information disclosure policy of the central bank itself. So, in fact, you need to report them to the CBK for action, but you certainly do not want to do business with them. Okay. You know, this situation is likely to dampen confidence, especially in smaller banks. What can smaller banks do to reassure their customer base?
Well, basically what the financial experts are saying is banks should be compliant with the law, primarily. If a bank had to be respected, like it has been clarified, a bank has to follow set down rules. The central bank does not even need to come in to interfere or to reconfirm that actually a bank is following certain set rules. Therefore, from my perspective as an advocate, I would imagine that all banks must follow laid down procedure without exception.
Okay. Do you think there is need for, you know, smaller banks though to go out to the public and reassure them?
I don't know if they need to go out to the public, but I believe maybe they are too small. They might have problems with finances. They should form an alliance and, you know, have better income, better money and capital, to do their business.
It's about size.
All right. There has been the question about bank lending policies, and you've raised that, Gabriel. Shiv, you know, what kind of lending? Everybody wants to be able to access credit and cheap credit without being asked too many questions by their bank. Yet at the same time, especially in this scenario, saying that, hey, lending policies could be the problem. What is reasonable?
With lending policies, as long as a bank is comfortable with the borrower's ability to repay their loan and repay their loan within their means, then credit should be advanced. However, what we have seen in this scenario, especially which has now led to the closure of, I believe, 2 out of the 3 banks, is that there was a lot of internal lending. At the end of the day, no one is saying stop internal lending. What we're saying is that make sure that it's within regulation, and even when it's within regulation and statutory requirements set down by the central bank, make sure that it's done in a prudent manner. The same way you would advance money to anyone else is the same way you should advance money internally.
It should be standardized?
It definitely needs to be standardized, and the closure of Chase Bank and especially Imperial Bank, which have 2 of the same issues, then raises that question as to, was it standardized? Because 13 billion shillings of internal loans above the requirement. So it does raise those questions which have to be answered.
In the case of receivership, you know, what legal action can, if at all, depositors take with their bank?
You see, this is still a completely fertile ground for a very smart depositor. We can still go to court and claim that the central bank has actually not been as careful as they should be. Why am I saying this? Before a bank is allowed to operate, they issue a license, which is with very strict terms. Thereafter, still central bank has powers to supervise through several ways of surveillance and making sure that whatever is going on in the bank, and they have a right of access without really being hindered. So by the time you come to say Chase Bank is under receivership today, central bank also must demonstrate that they actually did their due diligence to protect the depositors, the customers, before they actually start to tell us at the end of, at the tip end, that we are closing the bank. That's
Gabriel, did central bank drop the ball on this one?
No, I absolutely not. Without being prejudicial to my legal colleague here, the role of the central bank is not to run these commercial banks. Yes, it has a regulatory function, it has a licensing function, and I think they've done this. The reason we are beginning to see these types of recurring failures of bank is precisely because the central bank is taking that responsibility seriously and following it through with appropriate action. So to the contrary, I think what they are doing is, in the long run, will be for the better of the financial sector in Kenya. There may be a few pains along the way, but what they are doing is will certainly situate Kenya as one of the best regulated and robust financial sector in Africa.
But Chief, one would imagine that in the run-up to these events, that there should have been some warning bells that the regulator should have seen, and perhaps other action could have been taken before receivership.
I think we need to take a step back and look at government's role in this economy first when it comes to regulating the banking industry. Central bank's role is obviously a supervisory role, and government's role is to create an enabling environment in which banks operate. However, at the end of the day, we all only receive as much information as is disclosed. What we have seen in these cases is not central bank dropping the ball. If the memo that came out by central bank very clearly stated that on April 6th with Chase Bank, the bank was going to become insolvent due to a number of reports that were going out which caused a run on the bank. It's actually the responsibility of the board and senior management of a bank to ensure that they are able to run a bank with the best ethical and corporate standards, because if they are, then central bank is merely performing a supervisory role and creating an enabling environment for them to work.
If you say like that, which I think is quite justified on its own, what about an ordinary person who has not seen any notice, and probably this is a notice from central bank? I'm not necessarily critiquing this particular statement, but what is the role of central bank? The central bank can actually impromptu walk into any bank and demand to see the books, the statements, the names of customers in the bank, and make a report out of that. My brother is talking about it is the role of the management and the board of directors. these are the same people who are allocating themselves 10 billion inside a loan, and then today we realized it's come to about 8. I don't think we can allow, this is just to me ordinary corruption, the usual way people are corrupt in the, in the country and in the world. The insider trading and the management is actually usurping authority in the wrong way. It's abuse of power.
And so who would you go illegally if somebody wants to take action against any of the banks that have gone under for some, improper conduct? Who would you go after?
We have sued Imperial Bank, for example, already, and but over before the closure. But it is definitely related when you see at what the issue was and how in a month or two it was closed. Every citizen has a right under Article 22 of the Constitution, regardless of the validity of your claim. You have a right to access the court and inquire from court. If I was supposed to be paid my money, look, my brother spoke about demanding reports and seeing the validity of the bank and how good it is before you put your deposits there. Right. Very few people will do that. Financial experts can do that. An ordinary citizen, as long as there is a bank and a big billboard or something, they will go into the bank and deposit their 10, 20,000 shillings. When you expect that this person's 10, 20,000, which is really his fortune, that he needs to use some procedures to go to get that money, it is unfair to the people. So I still strongly feel that the central bank, yes, we now agree it is coming from, it is trying to shed off the ills and mistakes that probably were done by various regimes. And I don't doubt that Professor Njoroge is actually definitely good intended in making sure that the banking system is clean. But what happens, and this is the unanswered question, what happens with the ordinary person who is caught in the crossfire? I believe central bank must warn the customers of the banks, the subject banks, and it must go beyond merely closing and saying probably the ordinary person who has some 200,000-300,000, which really is what is his investment, should be given his money without any question.
Gabriel, I mean, are there other best practice globally? What kind of warning shots can central bank fire, if you like, and without causing panic also in the market, but still protect depositors?
Listen, the role of the central bank, it is to protect the depositors. There is an insurance scheme, a depositor insurance scheme up to a certain amount, but we need to keep in mind that the biggest asset that any bank, commercial bank, has is not the money that's deposited, it's the public trust. That is what banking is all about. Public trust that I will give you my 200 shilling, 20 shilling, you will keep it for me and give it to me when I need it. Now, the biggest responsibility of the banks as well as the commercial bank, the central bank, is to protect and preserve that trust. Now, along the way, there will be hitches. And the central bank, again, to its credit, has behind the scene worked with Chase to make sure that it doesn't get to this, to the very last minute. I mean, taking over the commercial bank is the last resort, the absolute last step you take. But along the way, I'm sure supervisors have looked at the books, raised the red flag, followed up as appropriate.
You wouldn't advise them to put out some sort of cautionary statement in the public?
That you do perhaps through the annual reports that come out. You see, if they put out a cautionary note, then that is a call for a run on that bank. Who amongst us is going to sleep easy when the central bank raises the red flag and you say, nah, I'm not worried, it can't happen?
Completely agree. Finance is a game of confidence at the end of the day. And by you issuing a cautionary note while you prepare a report, you will render the bank insolvent. And at the end of the day, central bank has actually stepped in for Chase at the right moment, because had they taken that step back to do further due diligence and further audits and further reports, at that point, the situation could have worsened. I mean, Chase Bank was under obligation to release its financial statements, and it did that with a qualified opinion, which at the end of the day led, amongst many other factors, to a run on the bank. So,
so we should cover
Go ahead.
at least to help the bank not to go under
No, but
fire.
that's the role of audit, for example. You know, you have audit, reputable audit firms that carry out these audits. Now, if there is a statement that's qualified, then the central bank does step in and take appropriate action.
But do auditors go to the extent of making, you know, the conclusion about whether or not that bank is stable, or do they just do books and leave that to the central bank?
Well, there is qualified and unqualified, and if they don't, then in an audit report, what they include says as much as what they don't include. And you can read the reverse and say, if they have not said X, Y, and Z, then there is something that they are not prepared to respond to.
Okay, yeah, and I believe I just want to make one point. I believe I represent quite a number of ordinary, small-scale feeling in town. The banking industry, central bank, for example, is governed by the Banking Act. It's also governed by the Central Bank Act. It's again governed by acts like the Building Societies Act. And there are legislations such as the Payment Systems Act. You know, and under this, the central bank has actually, I mean, the rules that are under these acts are quite a number. There are, you call them, I don't know, risk rules, other rules in terms of taking deposit, microfinance. I mean, you know, there are several rules. When actually, one morning you wake up and say, about 500,000 customers are going to be affected because of probably that there was behind the scene talks between central bank and the bank. It honestly feels for an ordinary person that there was a collusion and a conspiracy to deny as an ordinary person. And by the way, when we discuss these financial issues, I'm aware there are big boys in terms of financial deposits. Then there is the public. And when the public, the small man removes 100,000, 200,000, 300, it really doesn't matter, even to the bank, even to the central bank, as long as it's within the rules. Now you know very well that you cannot withdraw more than $10,000, let's say $1 million previously. For those huge deposits, it may not make much difference if they go through the period of receivership, and then now they say recently they are going to start paying up to, I don't know, 25,000. I mean, this, in my honest view, the central bank must wake up a little bit more, and what our good Dr. Njoroge is doing now must be taken to the people in terms of safeguarding the ordinary person, so he never loses, and the delay is not inordinate in terms of payment.
How soon should a depositor, you know, be able to get their money back?
At the end of the day, you're looking to ascertain the true position of the financial services company. So even in as much as there is anyone's deposit online at that point in time, the minute a malpractice or unsound banking practices are brought to the central bank's attention, we would crucify them for not acting, and then in most cases we also crucify them for acting. So at the same time, we also have to take a step back and ask that what is it that we really want? They have to act, and yes, there are times when central bank can go in and ascertain the financial position of a company. However, it just at the end of the day boils down to corporate governance. Even from central bank side, yes, they have a number of banks to supervise. However, there are important disclosures which have to be made for them to be able to adequately supervise. They're not there to babysit these banks. They're just there to make sure that...
Fair enough, but now I'm a depositor, my bank is under receivership, I want my money. How soon should I be able to realistically get it?
It depends on a case-by-case basis, as soon as possible. I believe with Chase Bank, we'll see it much sooner rather than later. There are a number of financial institutions, global financial institutions, which stand behind this bank. And I'm sure that once the time has come right in order to shore up the capital, then depositors will be able to take out their money. However, the last thing you want is an insolvent bank and no one can take out their money.
Right. Gentlemen, I'll come to you for your final views. Gabriel?
Listen, you know, banking or what you do with your money always has a risk. If you put it under the mattress, it's risky. If you put it in a bank, there's a degree of risk. However...
But you know, under the mattress, I can look at it.
And you can
count it.
But in institutions such as Chase, the risks are known and they are mitigated. Invariably, you will always have one or two outliers such as this. But across the board, I want to say to Kenyans, the financial sector in Kenya is as solid as it gets. Well-regulated, robust, deep penetration. Look at the number of Kenyans who have access to finance in this country. So, yes, there are some hitches along the way, but when all is said and done, this is a sector that you need to be absolutely confident about.
Shiv?
I completely echo the thoughts. Kenya as an economy is growing. When an economy is growing and it's growing in a stable macroeconomic environment, anyone who is an intermediary, in this case a bank, would do well. And it's important that the entire system is safe and sound as it is now. However, the outliers then do need to be dealt with, and it comes back to an issue of corporate governance. For us, we're releasing an index on corporate governance because it allows your everyday person to get a deeper look into what a sophisticated investor might have and someone else might not have. So there is that rule, but we are a sector in transition, but we're in a transition to a more efficiently regulated and a safer and sounder banking system which has almost an 80% financial inclusion.
All right. Ishmael, your best legal advice?
The banks hold public money in trust for the depositors, for the customers. In my honest view, what we call fiduciary duty, the duty on the banks is extreme. They must be actually, like you said, the issue of integrity should never arise, should not come to the fore as it is now. Lastly then, the government holds public money, the banks hold public money, lawyers, we do hold public money in client's account. So it's not proper for the private sector sometimes to really hit hard on the bank, on the government, that it's mismanaging or whatever, while we forget that actually even the banks should practice extreme caution when they are dealing with the money that they are holding for the public. So, and I believe the central bank then, the expectations are even higher.
But do you think there are grounds to sue?
Oh yes.
In this particular issue?
Oh yes, like I have said, under Article 22, you have access to very good judges nowadays. You will go there and they listen to you and they give a verdict. If my money is kept in a bank for a longer period than I need, like he said, I also feel that legislation should be in place to make sure that money can be paid either in 1 or 2 months. Not that we wait forever for them to give us a solution. Thank you.
Gentlemen, I thank you very much for your views this evening. Gabriel Nagatu, Regional Director, African Development Bank, Shiv Arora, Associate Partner, Cited Investment, and Ishmael Nyaribo, an advocate. Let's catch up now with some more news of the day. The Inspector General of Police, Joseph Boynet, has ordered Nakada Chairman John Mutuzo to record a statement with police following claims that senior officers are protecting drug cartels at the University of Nairobi. Michael Jenga has details.